Okay, I just want to do a short little video to talk to you about life insurance. And most people don't understand um, the dynamics of life insurance. Been having a lot of conversations lately with real estate colleagues and um, just strangers, striking up conversations, letting people know um, that I am a life insurance agent. And, sometimes they'll say, I already have insurance. And when I ask them, what do they have? They absolutely have no idea what they have. They have a lot of policies, but they don't know what they have. So, my suggestion to you, if that's you, pull your policies out, go through them and see what you have. And if you need somebody to help you review your policies, then you can contact me and I'll help you go through your policies to see what you have. Another thing is, people think now life insurance is just life insurance. It's when you die. But guess what? That's not true. That is not true at all. So, life insurance now has living benefits, chronic, critical, and terminal illness benefits. So, what that means is if something happens to you while you're alive, you get to pull out a lump sum and use it to help take care of you while you're down and you can't take care of yourself. Maybe you need to hire somebody to help take care of you. Also, it's used to grow cash. A lot of people don't know that either. They don't know that you can grow cash. People use it for wealth. Bet you didn't know, Walt Disney, that's how he started Disneyland. He tried to get a loan from the bank. They said no. And I believe it might have been three at the time cash value policies that he had. So he pulled the cash out of his policies and started Disneyland. So if it wouldn't have been for Walt Disney having life insurance, guess what? It would be no Disneyland. J.C. Penney. During the Depression, that's how J.C. Penney's was able to stay open because he, the owner, used the cash in his policies to pay his employees. So it's not just life insurance. We don't know that. People have been using cash value policies forever. The Rockefellers, that's part of their wealth building that they used was cash value policies. So another thing is people don't understand the different types. There's two types. You have permanent and temporary. Do you know what that is? Do you know what permanent and temporary is? Okay. Permanent means it lasts. Temporary means it doesn't. So temporary is your term policy. So think of term temporary. Term temporary. It has a term to it. 10 years, 15, 20, 30 years. It's like renting a policy. Something you don't know. 99% of the people outlive the policies. I've had calls where people are calling me because they found out that their 80-year-old mother, their policy literally just termed out. And now they're trying to get insurance for somebody that's 80 years old or older. And it's very expensive when you get that age. And it was a sad story. The lady, I couldn't help her. Her father was dying and his policy had just turned out. And he was 80, but the fact is he was dying and he could not get another policy. So people don't understand. That's one thing I didn't understand. It helped me when my son died in 2002. Thank God for the couple that came and kept insisting about me getting a policy. I didn't know I was going to need it, and I was able to bury my son without having to be a burden on my community, friends, family, church. So, but I didn't know what it was. I had no idea what term policies are, and nobody ever explained to me what a term policy is. They were just get insurance, get it, but not how it worked. So, um, whole life, that's where you grow where it also, whole life policies also grow cash value. And then you have your IULs, UL or IUL. UL is universal life. IUL is the index universal life, which is in the index. Well, it's the index, I'm sorry. It's based off of the S&P 500, and there's some other things that you can use too besides the S&P 500 when you're getting your policy or when your agent is signing you up. They pick the different strategies. So, and another thing, whole life also has where you can get dividends. And when my mother and my grandmother came to California, they had policies. My grandmother, her policy is still paying dividends. I just checked the uh, California unclaimed properties, and guess what? Her policies, I mean, it's like thousands of dollars in the, a couple of $1,000 actually, not that, but, and she's been gone since November 2002. No, November, yeah, 2002. She's been gone. So, whole life, but whole life is more expensive than the IULs. So, but those are permanent. Whole life, ULs, IULs, those are permanent policies. Um, and but like I said, a lot of people don't know what they have, And another thing, people don't understand either is that, oh, do you have insurance? Oh yeah, I have it through my job. Guess what? If you don't keep that job, you lose your insurance. Now you're uninsured. So you might as well say job insurance is temporary as well. So you need an outside policy. You need your own policy because that way you're covered. And a lot of people, you could be on the job, man, hey, 10, 15 years, and now you're 10, 15 years older, you lost your job, and now that's going to be more expensive. So my suggestion to you, if you're on a job, you don't have your own outside insurance, you can even get a small policy, $50,000, and you're younger. If you're younger, it's not going to be that much. If you're older, I suggest you hurry up and get an outside policy so it won't be that much either. At least you have something, because you don't want to wait till something happens and then it's like last minute. These jobs, they're so uncertain. Sometimes you don't know if you're going to have a job tomorrow. So at least you can get a policy and you can be protected. And another thing people don't understand is mortgage protection. You might have heard people talking about mortgage protection, which basically is a term policy, and a term policy covering the balance of your loan. If you get it when you first buy the house and you're younger, you can get a 30-year term policy, which will cover the life of the loan. It'll be 30-year policy, and if you keep the house for 30 years, then that premium or what you want to call it, your mortgage is covered. Or even if you want to get partial, like if you have a $500,000 mortgage and you only want to get a $250,000 policy to cover that. But mortgage insurance is term insurance, and you still have to qualify for it like you would any life insurance policy. And I know I'm throwing a lot in there, and I'm going to do separate videos to break down each one so that it's not a lot. But I just wanted to, because I've been having a lot of conversation, and, this is for my realtor colleagues. Do you have life insurance? Because by us being self-employed, we don't have the outside coverage. And even if you do, like I said, that's not permanent. So, make sure your family's covered. Make sure your family's covered. Make sure you have life insurance to help your family. And don't think of it as life insurance anymore. Think of it as wealth building.